President of the CVA board, Jérôme Bailly, and from Adnovum. Please welcome them on stage.
Thank you. Hi again, everybody. For those who were there this morning, I did the opening welcome, and now super excited to do this panel. I had the privilege to be able to choose my favorite panel, and I choose this one on purpose because the infrastructure is really my favorite topic. As you might know, beyond CVA, my real job, I'm working at Adnovum. We are a software engineering and cybersecurity company headquartered in Zurich. We work with most of the bank on traditional fintech, but also on crypto. And really happy to have the chance to moderate this panel today. So for this morning, for those who were in the room, myself, I really like two things. One from 𝘰𝘰𝘮𝘧𝑒𝘭𝑒. He said that digital assets are moving from experience to real product. He says 20 banks in Switzerland are already proposing digital assets. So how do we move from this experiment to real product? The second point that I really like was from Christian, CEO of Franklin Templeton, about infrastructure. Remember his pictures with the containerization of finance. And to sum up, he said infrastructure change don't just improve efficiency, they collapse all layers and force institutions to justify their existence. So that's what we will discuss today. We'll discuss, we'll try to make it as concrete as possible so that when you exit this room after, you get concrete use case. We'll walk you through three milestones. And to do that, I'm joined by leaders covering the full stack. So we have some familiar faces from the 𝘺𝘴𝘵𝘭𝘪𝘨𝑒 Association, Talos on execution and connectivity. We have a crypto finance, long-time 𝘺𝘴𝘵𝑚 Association member on regulated custody and settlement, and a new one. Thank you for joining, Avaloq, on core banking and platforms. So I will first let you introduce yourself, what you're doing in the space, so that everybody knows who you are. Let's start with you, Irina.
Perfect, thanks a lot. I'm Irina Kessel, I'm product owner of crypto assets platform at Avaloq that is known for core banking system, but actually we're having a bit more to offer.
Phil?
Thank you very much for having me, and I must say I'm impressed that still so many people are in the room, thanks to you guys as well at this hour. My name is Phil Detweiler. I'm working for crypto finance. I've been about 20 years in TradFi and about 10 years in crypto. So I think what we're discussing today is actually precisely in this overlap of those two industries.
Thank you very much. My name is Chris Bock. I would like to echo on that. I also have 20 plus years TradFi and then 5 years crypto experience, and I represent Talos, and we are the largest provider worldwide for infrastructure for banks and asset managers in digital assets.
All right, thank you. So we could speak for hours on that topic. We could go super deep, but to make it really concrete, I want that we put ourselves in the shoes of a Swiss bank that wants to start simple with digital asset, let's say custody and trading, with integration with core banking of a limited set of top coins. So that will be the framework of today's panel. So let's start with the milestone one, custody. As I see it, that's the #1 tech solution that you have to take care of when you are a bank. And I really often hear this question about buy versus build. So let's start maybe with you, Phil, as you are a more custody-focused expert. So what is the best argument against building custody in-house, for example, in year 1 or 2?
I enjoy myself discussing this topic here because at Crypto Finance, probably about 90% of our customers are banks. So likely each bank is asking themselves, should we make or should we buy? And I would say in the tech departments, obviously the make is prevalent because they do like finding out their own stuff. But what we have observed is that eventually once things are really put under pressure, scalability, that it needs to work, institutional grade, it's actually difficult also, even as a major bank, doing your custody on your own. It's not just the technology, which you probably could handle, it's the mindset, it's the knowledge across the board. And I would say there are many different grades as a bank you can choose entering the space, from a simple approach, well, we are just going via products, ETF, ETPs, etc., or you can basically go over traditional rails you currently have established. You can go via your CSD, via Swift rails, even, etc. You can approach a custodian for your custody directly, or if you really must, you can also insource infrastructure. At Crypto Finance, we could basically offer all of those four ways, but it really is important to us that you, as a bank, as a customer, find the right solution, because there is not a silver bullet for everyone. Everyone has a different approach that is the best for them.
All right, thank you. So we will also switch between these three milestones, the custody, the trading, and the integration. So for you, Eri, now, when it comes to custody, from day one, what must be reflected in the core banking environment? And maybe you can use that question to explain to us a bit more on how you're working at Avalok, because I have to admit I discovered your solution. So maybe you want also to share. Everybody knows the core banking, but tell us a bit more about what you're doing also on the digital asset side at Avalok.
Absolutely, I'm happy to do so. So maybe to start, what you described before, right? That banks usually try to start very small and then expand with the time. And that's the moment when they select the limited use cases, they select the providers, the trading, custody, and then they remember about core banking system only in terms of, okay, we need to reflect all what we designed in the core banking in order to have the balances updated. But that would work in the beginning, but then when the volumes grow, you actually will realize that you need to have a proper integration, otherwise all the burden is actually on your operations team. Without having the automations, without having any operability possibilities, you will really have the stretch on that side. And that's where the bank finally will start looking, okay, so what my core banking system offer? And at that moment, you will discover there are so many small but quite painful pain points that are usually not supported natively by the core banking system. Could be extensive number of the decimal points for the crypto assets. It also could be, for example, management of the gas fees, right? Because that's something that doesn't exist in traditional banking. And probably the most difficult part is that core banking system is not 24/7. And that's potentially where the banks looking now with instant payments. But for example, at the time when we started, that was not yet a requirement. And crypto was the first use case that really needed 24/7. And so what Avalok did is we started also thinking that we can design everything in core banking system is just another module inside the core banking system. But very fast we understood that no, we need to probably bring it outside, making sure that this standalone application will be fully integrated to the core banking system, but still will allow you to offer trading, for example, 24/7 for your client. And that's basically our current design. We have a standalone application, 24/7, fully integrated with core banking system as a pre-trade checks as well as for the post-trade bookings. And also that brought us the new value that we can offer to our clients. And that's actually the operability and the orchestration. But probably we will want to cover this a bit later.
Yeah. Yes, thank you. So let's switch to trading. We'll do back and forth, and let's take from a starting point. So Christian, should a bank begin with single broker or go straight to multi-venue, multi-broker, and why? And that so might be a question that Phil might add his view on after. But Christian, this is for you.
No, of course, I'm slightly biased here, right? So we are selling trading technology for you to be able to actually do the smart order routing and best execution on our platform among several trading venues. So from a perspective, time to market, of course, it seems to be a very easy solution to go in and choose a single broker, but it gives you, of course, and also by definition, a single point of failure. That means if you are a bank with, let's say, several million of end customers behind, and you rely all your pricing on one single broker, and even if it's the best broker in the world, if that broker is not accessible for whatever reason during volatility in the market, you might end up with an awful, horrible PR afterwards if your clients won't be able to actually trade in the market. So at least if you go for single broker, at least you need some kind of backup solution, some backstop here. But also you have to see, and that's similar like in FX, where basically very few banks only that have been highly specialized will go in and choose a single broker for the FX setup. Why would you want to do it any different in other OTC markets, like for example crypto? Because of course the aggregation of the different prices will give you much better price, and of course will also give you a basis to actually have a broker review where you can argument and say, listen, you only got 20% of my business, but you should have been 33%. Perhaps you want to optimize your pricing accordingly, things like that. And of course you can then also rotate accordingly. So from that perspective, I would always argue if you have end customers self-directed behind, you need to have a certain setup that ensures that you always access to liquidity.
I do think it's no secret that crypto finance is also cooperating with Talos. We're very happy with their services, and I can only extend to what Christian just said. What is an issue at the broker, we as a prime broker, we basically face the same issue. We also do not connect just to one liquidity provider, because despite the multi-trillion market in crypto, liquidity can get quite thin. And as we need to ensure best execution also at the prime broker perspective, we also connect to multiple venues, multiple liquidity providers. So at our level, it's basically the same, and needless to say, you need to have BCM and backup solutions that if one system is down, that also as a prime broker, you can swap over to a second approach.
As you're speaking, I want to come back on custody, because that's a question I hear for, I don't know, 5 to 7 years now. Let's double click more on the technology behind the custody. HSM versus MPC. So I hear from banks that they go only HSM, but then there is some MPC, so MPC multi-party computing. It's more software. Maybe you can redefine this too. Tell us a bit more about these two standards and what are preferred for banks in Switzerland these days?
With the danger of probably not entirely be politically correct, but I would consider this debate between HSM and MPC probably a little bit religious.
Yeah.
I would say 5 years ago, I would still have been quite a bit in the camp of, well, MPC is interesting, but it has not yet been battle-proofed. Then the argument would come up, but Phil, MPC, purely the technology has been around almost since the 70s, so it's been for a very long time around, but it was not used in the industry. That's why at that point of time, HSM-based solutions were more prominent. I do think today you can basically use both approaches. Mm-hmm. I was just talking with, without giving any names away, talking in the room that they are now looking in a process of combining MPC and HSM. I think this is fairly interesting as well. We at Crypto Finance, we feel very comfortable with our HSM solution. That said, I would say the focus on this discussion between MPC and HSM is basically flawed, because whatever technology you're choosing, The technology is just one aspect. I would argue the even more important aspect is the governance and the procedure that need to come along. It's about clear signing, it's about access rights, etc. That is all on top of the tech stack. I would think that Irina, you can comment on this as well.
Absolutely agree, actually. And earlier we also had a nice workshop where we were discussing that, all the procedures around it, all the layers of security that you need to add, that's what really matters in order to be regulated bank with access to crypto.
So I understand it's not one or the other. It could be both. It should be both in some of the case.
We see more and more of that banks actually choose to have like a more trading active and typically MPC setup, and a more like cold storage HSM setup in the back. And for that, obviously, you would need the technology to actually be able to integrate both into your tech stack.
Great. So these two religions can fit together nicely. That's great. Christian, best execution without over-engineering. What does best execution look like for a bank trading only top coins as at the start? Let's say best
execution is obviously a number of things, right? So it's not only the price, which of course is a very important part of it, but also the likelihood of execution that you have to take into consideration. For example, if a broker constantly rejects you, we would then put it in a penalty box and not consider that broker for a number of seconds or minutes until we can actually be ensured that execution is likely again. And also what's very important here is, of course, that you document how you actually execute on behalf of your clients, that you have a snapshot of the market and can at any given time prove that this was the best possible available price at the crypto market at this very given millisecond.
All right, thank you. Irina, come back to you. So you have a standalone model, I understood. So where do you draw the boundary? What stays in the core banking and what lives in the digital asset platform? Can you...
Actually, ultimately, everything should be reflected to the core banking system, but just not everything is suitable to be reflected in the core banking system. So therefore, usually we leave outside of core banking everything very much blockchain specific, like, I don't know, transaction hash, the balances from custodian, and so on and so on. So it's something very specific to crypto we leave outside. However, all the balances, all the object modeling for the crypto assets as a new type of assets, it's of course in the core banking system.
All right. Can you tell us a bit more? When did you launch this service? Do you already have some clients running? Because Avaloq is really, I think, the leader when it comes to private banks in Switzerland, core banking. And we do at Adnovum a lot of integration with core banking. Everything could be super complicated. So tell us how easy it is to use the standalone version, and why did you really choose the standalone?
So actually, Avaloq is working on crypto assets since 5 years already.
5 years.
As mentioned, we started as a separate module, then we converted to the standalone application. And the main reason for this is 24/7, to be really able to offer that to the clients. And that's also, for example, the way for us to look then into the crypto lending, because again, the risk monitoring should be 24/7 when we are talking about crypto. We have already clients live. That was also a great journey for us, because with every client we onboarded, we learned a lot. They really tested our solution in the best way. You can check, actually, we have live 2 clients currently, that is BBVA and 𝘺𝘭𝘵. And as you can imagine, Zurich Cantonal Bank is really the one who challenged us on the volumes, on all the expectations of being always on top of things, making sure that we can deliver on time, and also making the client satisfied 24/7.
All right.
On that note, if I may, we as a company, we believe that eventually, and I think that's probably the same belief we have here with many people in the room, eventually all assets will be tokenized. We will all have, because we are talking a lot about crypto, but it should more, the discussion is really about digital assets. And coming back to Irina's point about having the 24/7 trading, for example, and new functionalities, and just the normalization of the different symbols and number of decimals, for example, it's very difficult to have that built on legacy platforms, which is actually why Talos came into production in 2018, simply to set off from ground zero, and pretty much also what 𝘴𝘺𝘅 has done with their crypto module. So what we're seeing now is currently we have two business cases that actually work in digital assets. One is Bitcoin for storage of wealth, and the other one is stablecoins for collateral management and or for cross-border payments. Rest of it will eventually come, whether it's going to be 3 years from now, 5 years from now, we don't know, but eventually will come. But here, obviously, we are also client-driven, so we don't really see the need to do tokenization of equities just for the matter of tokenization of equities, but only if there's a real need for it, and there's actually a peer-to-peer trading like we saw from UBS a little bit earlier today, and other similar cases. So I think that's the whole shift in the financial industry that we're seeing right now.
I would probably add to what Irina said before, that this integration into a core banking system can be very painful. We speak out of experience. We are Crypto Finance. We have our own core banking system as well. We see how really difficult and painful this can be. Now, this is one aspect of the adoption in the industry. And we're all here to learn more, to see this industry grow. The question I sometimes miss a little bit, is it rather a pull or a push from a demand in the industry? And that question probably can answer it also along the rails, how you bring crypto assets to these banks. And I do think that it can be interesting to start with the old traditional rails. Sorry for the SWIFT representatives in the room here as well. But this is actually quite interesting because those rails, they are connected with all the banks already. Now, if you manage, as we did in Crypto Finance, to bring orders, crypto orders on traditional rails, you face much less resistance on the adoption. So next to APIs, I think it's a very interesting approach, also having SWIFT integration.
I know you recently did a project with Clearstream. Clearstream is part of the group, is that correct? Can you tell us a bit more about that?
That is correct. Crypto Finance belongs to Deutsche Börse, so does so does Clearstream Bank Luxembourg. CBL is an international CSD central security depository. Crypto Finance is the 61st sub-custodian of CBL, which allows us basically with more or less the snip of the finger, or let's be a little bit more accurate, like a very, very light additional paper trail onboarding about 2,500 banks basically within days, because the rails, they already exist, because the incumbent banks can go via SWIFT to CBL. CBL is approaching us, and we are using SWIFT and converters to integrate into our core banking system.
All right. I think we didn't cover segregated accounts already. So, is it? Can you feel still? What does segregation account segregation really mean?
Versus omnibus, yeah. Sorry if I'm jumping in here, because this is really so close to my heart.
Yeah.
I would say the crypto industry, from a timing perspective, is divided into 3 phases, probably up to 2020, when the argument of a missing adoption was missing institutional infrastructure capabilities, where afterwards, until like 25, it was missing regulation. Now, what do we have in 26? What is missing? I would say the only thing that is missing is the boardroom willingness to adopt. Now that brings me to the first question, to back in 2020, where still the notion of multiple global regulators was you basically need to have your digital assets segregated on-chain. You can't have them in an omnibus account. This notion is definitely gone, and I'm a big proponent of omnibus accounts for multiple reasons. Firstly, it is much more efficient because you can move assets more quicker, because you don't need to wait, for example, for blockchain hops. You don't need to go on-chain. That means it's additional security if you have less transactions. And a lot of the incumbent banks ask, well, can't we have a segregated account, but if we have payment in and out, please go over a hop via a wallet of yours for anonymity. Guess what? You can stay in the omnibus account right from the beginning, and you have much more on-chain anonymity, what basically the banks, our clients, would like to have.
Thank you.
Maybe if I can add, actually, I think it's not about choosing segregated or omnibus, it's just different purpose. So depending what you want to offer, you can pretty much offer the omnibus setup for trading for the client, and for the same client, in case if he wants to store it for a long time as a segregated setup, maybe even cold wallet setup. So all this can exist. It's possible to configure, it's possible to offer, so why not?
I would like to add, if I may. So I've had the pleasure of taking a double-digit number of banks live, and every bank is slightly different and slightly different understanding on how the target architecture should really look. But I would go with Phil's point. It's only very rare cases, actually, that real segregated wallets actually make a lot of sense. Because if you're doing the custody in-house, like you do with equities, like you do with, well, with money as such, and your end customers might, for example, just be average retail clients that put away 200 francs at the end of every month to the crypto savings plan. They never actually ask to take delivery of the coins, and they will never deliver coins into their account. So for them, it's just a number on their account statement next to the perhaps dollar balance or the BASF shares that they may have.
I think if there are hopefully multiple banks in the room, there is one thing I would like you to walk away with, the understanding that the assets in an omnibus account is not less bankruptcy remote than in a segregated account.
Okay, good. So I see we have less than 2 minutes, but you kind of answered for my last question already, Phil. So we asked the question for two other. So once again, we are this bank which wants to launch custody and trading, top coins, 6 to 12 months. What is the one decision they must get right from day one to avoid painful review later? Maybe Christian, like one decision that they have to get right from the beginning, from scratch.
Where do I want to be with this decision in 5 years' time? That's really the question to ask yourself.
Exactly, long-term view. And Irina, you have a few seconds to close. You'll be the last to answer.
Perfect. So I would say make sure that you design your operation system from the very beginning. Make sure you don't forget about core banking system, because you can encounter some limitations in a very long time. And then also don't forget about the orchestration. That's unfortunately we didn't have time to cover, but actually, yes, you can have as many parties as you want, offering all kind of functionalities, but you need to orchestrate it end to end. You need to make sure that everything flies smooth, that you can extend the providers that you are using, that you can shrink if needed. So make sure that you build it modular, make sure that you think about the workflow end to end. And yeah, having it future-proof is absolutely the key.
Excellent. Right on time. Congratulations, Irina. So we are at the end of this panel. Thank you very much for this discussion. Of course, if you want to go deeper, we only have 30 minutes. Join the panelists during the break, which is coming soon. But before, one last panel on layer one. And of course, we will, to keep maximum people in the room, we will, in 30 minutes, we will reveal the 2026 Digital Asset Banking Report that we've done with the big whale. So please stay and see you later for the networking. Thank you.